Hey everyone, thanks for tuning in. Sorry it's been a while, been busy working on the topic of today's podcast, which is Michigan auto insurance reform. Very special guest, my own father, the guy who taught me everything I know about insurance, to help guide you through Michigan auto insurance reform and the new laws. Thanks for tuning in, and I hope you learn a lot about insurance. Hi everyone, and welcome to the Professional People Podcast, first ever live episode in person with a very special guest of mine, my father, boss, grade school football coach, mentor, and best friend, Mark Diederich, CEO here at TDA Insurance and Financial. Dad, thanks for coming on, man.
Good morning, Dan.
All right, so why I'm having Mark on today, and it's kind of a weird podcast to have your dad on, but I wanted to use the podcast platform to talk about a change that's going on in the insurance industry. And as anyone who knows me or Mark, we're insurance people, we live and breathe insurance. And so today I wanted to use the podcast to talk about Michigan auto insurance reform. So to get started, first I wanted to introduce Mark and let him talk a little bit about himself, his experience, how he got into the agency business, and how we got here today 20 years later.
Yeah, well, it's been quite a ride. We started an agency about almost 25 years ago, and I was in corporate America working for a financial services company, and I knew I didn't want to be in corporate America my whole life, and so after about 9 years in corporate America, I was looking for opportunities to go out on my own and create my own business. I had a little bit of insurance background, and so I started looking for opportunities, and I found an opportunity with Nationwide Insurance, who had a nice plan to get a new agent started from scratch. So I took that opportunity, ran with it, did very well with Nationwide for a long period of time. And about 10 years ago, I just had a feeling that things were not as good as they could be. And so we made a jump to become an independent agency 10 years ago. And it was a great move because we could do a better job for our clients. We could bring more options for our clients. We could bring more companies to the table, and we could always do the right thing for the client. The reason I got into insurance is it was something that I could do and make an honest living at. It was something I can kind of create my own destiny by running my own business. And most importantly, it had a component of helping other people protect their assets, protect their financial future. And what better way can you earn a living and help people at the same time? So it's been a great ride here. We've grown substantially. We're moving into the second generation now. We got you here. My other son is a summer intern here, so my wife works here. It's truly a family business. We get to work together, which has its pros and cons, but it's been a great ride, and I wouldn't have changed anything.
Yeah, well, you did a good job of selling the business to me and the young one, Matthew, my brother, and your son. And I think that's a special thing about insurance, is you see it a lot in our independent agency channel, is family businesses, family working together. And another thing about the independent channel is you always see people working together and sharing ideas, especially now lately. And I think that's a big thing that's going on in the industry. And I think as we go outside of the industry, as all of us start sharing ideas and working together, there's going to be a lot of interesting things to go on, a lot of positive change. But let's get to the bread and butter here of the podcast. Let's talk about Michigan auto reform. And I think to start the conversation, we really need to explain what is no-fault insurance and why is that such a special thing for Michigan compared to other states.
Yeah, well, no fault is a unique concept. Only a few states have no fault coverage as part of their state program, but Michigan is more of a true no fault. Some other states have modified no fault. But what it means in basic terms is, instead of going after the other party for your damages, whether it be injuries or property damage to your vehicle, you go back to your own company and they pay your damages. In some instances, you can go after the other party. Like in Michigan, they allow you to sue for serious injuries and medical impairments. But for the most part, you're coming back to your own insurance company and collecting whatever money it is that you need to pay for your damages to your vehicle. But what it really means to the consumer is, it means it's a very expensive insurance. We're the second highest average cost of insurance in the country. I think it's behind California. And our benefits are second to none. We have the unlimited personal injury protection benefits, but those benefits come at a huge cost to the consumers. And no fault is good, but it's very expensive.
So is that why you think that this law was put into place, to change that and try to drive down costs?
Yeah, ever since I've been in the business, they've been trying to reform the laws to make it more affordable for consumers. And they've tried, and every year they don't get anywhere. Well, all of a sudden this year they were able to get some changes put in place. I think the consumers were at a point where it was getting so unaffordable. There was more and more people that were going uninsured, which creates other problems. And the legislator wanted to do something, and they did something. Only time will tell how it turns out for everybody. But what they basically have done is they have given you, the consumer, the choice to downgrade your benefits for cost savings. So that's what the gist of making insurance more affordable. So people that can't afford benefits can select lower limits of benefits, and hopefully more people can be insured. But like I said, there's a lot to it, and only time will tell. It's a lot of confusion, a lot of chaos in the decision making, and what's the right decision to make.
For sure. So let's try to pick that apart piece by piece and try to give people some understanding here. So we'll start with what they've done to give you those options. So now, you said before July 2nd, everybody had those unlimited personal injury protection benefits, the medical benefits that cover you in the event of an auto accident. So now you have 6 choices. What are those choices, and how do people navigate through them?
Yeah, so the first thing we got to level set on is the benefits that we're talking about are personal injury protection, allowable medical expenses, and those are your medical expenses, which if you're injured in an auto accident, your emergency room, your ambulance, your rehab, anything that may fall under that. Then you have your attendant care coverage, which is if you're unable to take care of yourself, they'll pay for somebody to help you come into the house and get you out of bed, dressed, and all that kind of thing. Take care of your activities of daily living. There's also a component that pays for mileage to and from doctor's appointments. They call it medical mileage. And then there's also a component that will allow you to pay expenses to modify your vehicle or modify your home if you're in a wheelchair. So those are the components of the allowable medical expenses that have been kind of revamped in this new law. So the options that they're giving you to downgrade your coverage from unlimited, so as Dan said, everybody has unlimited medical protection right now. As of July 2nd, you can keep that unlimited medical coverage, or you can elect to take a $500,000 capped limit or a $250,000 capped limit. And if you're on Medicaid, you can take a $50,000 capped limit. There's two provisions that allow you to opt out of PIP medical coverage altogether. One is if you have a qualified health care plan, which is defined as having a deductible less than $6,000 and an insurance carrier that will pay benefits in the event of an auto accident. The second provision is if you're on Medicare Part A and Part B. Though if you have either of those, qualified health care or Medicare Part A and Part B, the law now allows you to opt out of PIP medical coverage on your auto insurance. So those are the 6 choices that are allowed right now.
Okay, now that we've gotten through the choices, let's dig a little bit deeper into those. So the first 3 that you talked about, the keeping the unlimited, the 500,000 and the 250, those 500,000 and those 250, those are lifetime benefits too. And the unlimited is for lifetime. So where those really come into play, especially the unlimited, if someone were to be seriously like paralyzed and needs that kind of stuff for life. So that's really the big risk you're taking when you opt down from that unlimited to the 500 or 250, correct?
Yeah, you can, if you're paralyzed or traumatic brain injury, any of that kind of thing that's common in serious auto accidents, if you're 30 years old, you could be looking at 30, 40 years of medical treatment, rehab, attendant care, occupational therapy, physical therapy, all those things, and medical insurance doesn't cover all those things. They cover your hospitalization, your doctors, some limited physical therapy, limited occupational therapy, but very, very few. Same thing with Medicare. They don't cover all the things that you will need if you're injured in an auto accident and you are in a wheelchair or have a traumatic brain injury for the rest of your life. So that's the risk you run if you opt out.
And not to mention, you're not only taking the risk, but the savings that people are saying, it's one line of coverage. So, the savings that people thought they were going to be seeing, they've been hearing in the media, they're not really as big as you would think with all the attention that this law is getting.
Yeah, at the end of the day, it comes down to, if I drop from $1 million or unlimited to 500,000, what's my savings and what's the value of that? Is it worth giving up unlimited benefits for a few $100s a year per vehicle? And each consumer's got to make that decision, but for anybody that has the means to pay those bills, in my opinion, it's a no-brainer to try to keep as high a benefit as you can afford to.
Mm-hmm. So not only are you not saving that much money, it's all about risk. Insurance is all about risk and what your risk tolerance is. So you can either keep the unlimited or drop down for $100, $200 to $500, maybe $40 to $250 from there on average. And then if you completely opt out, you're losing all of those coverages you talked about. Not to mention, you still have to pay your deductibles on your medical policy.
Yeah, that's true. If you opt out, most medical policies have at least $1,000, $2,500 deductible now. Usually 20% co-insurance. So if you have, even if you're just in a fender bender and they run you to the emergency room, you're going to eat up your savings on that one visit to the ER. I mean, it's going to be for at least $4,000 or $5,000 or $400 or $500 to $1,000 just for the ER visit. Not to mention if they do anything for you there. So that's going to eat up any savings that you would have had by going from unlimited to opting out.
Mm-hmm. And you can see the chart on our website too, www.TDA Now. We have an auto reform tab that gives you the breakdown of coverages from what the auto insurance covers versus the Medicare or opting out. And Mark put that all together. So all those things he just talked about are on the website too, so you can see side by side. So next I want to talk about, there was some things when the law was passed last year that went into place immediately. Can you talk about what those things were and how they changed the exposure for Michigan drivers?
Yeah, the law was actually signed into effect on June 11th, 2019. And although it was little publicized by the news, other than auto reform was coming and rates were going to be reduced, there's a lot of details to the bill that went into place last June 11th that nobody has really heard about unless they've had a discussion with their insurance agent. But the major change there is in the order of priority that claims are paid in from a personal injury protection standpoint. So, for example, the definition of who is covered by an auto insurance policy has been adjusted. So PIP benefits will only be available to named insureds or resident relatives of the household now. So what that means is, it's you, in my case it's me, my wife, and my son Matthew. You're no longer a resident of the household, so you're no longer covered under our auto policy, our personal auto policy. So, and that was a change that we had to make because you were driving one of our cars and you were not living in the household. So immediately on June 11th, you lost your PIP benefits. So we had to, make adjustments to the coverage. We had to write you your own policy so you would have your own PIP benefits and list us as an additional insured, and then that covered everybody. But that was one thing that changed, and the same thing applies to unmarried couples that live together. If they're not both named insureds on the policy, they no longer qualified under PIP benefits, even if their cars were insured on the same policy. And so by default, you are now covered by what's called the Michigan Assigned Claim Plan. If you don't have PIP coverage in the state of Michigan, then you are covered by the Michigan Assigned Claim Plan. But those benefits are the similar benefits, but they're capped at $250,000. So overnight, on June of last year, you went from having unlimited benefits to having $250,000 capped benefits through the assigned claim plan if you were either in a situation where you were an adult child that was driving a parent's vehicle but no longer in the household, or an unmarried couple that was insured on the same policy. But both of the couples or both of the individuals were not named insureds on the policy. So overnight things changed. So one of the other things that changed was the ability to sue for unreimbursed medical bills. And so as you get choices to reduce your medical coverage, now other parties that don't have proper medical coverage can now go after the other party to sue them for anything that they could not collect from their own insurance. So it opened up a huge exposure for individuals that can now be sued for additional things that they couldn't be sued for before.
Yeah, so that increases the exposure a ton, and that would be under the bodily injury liability coverage, correct?
Yeah, that's a separate coverage. It's bodily injury protection. That's the second part of the choices that you're able to make.
And so the state minimum requirement used to be a 20,000, 40,000 split limit. What are the changes there, and what are the new state, minimum requirements and new state minimum recommendations?
Yeah, so because of this ability to sue for unreimbursed medical bills, the state has now recommending that each person carry 250,000 per person, 500,000 per accident bodily injury limits. They do allow an opt-out to go down to 50,000 per person, 100,000 per accident, but you have to sign a waiver that you understand what you're doing and you're not doing what the state is recommending. So going forward, we're in a situation that most people should be carrying 250,000, 500,000 bodily injury limits.
And what about those people who have a lot of assets? Because as people are getting, this new can of worms is opened, and Uncle Sam Bernstein is licking his chops, and Mike Morris, they're going to be coming after people. So what do people need to be thinking about? Get to the state recommended requirements, but what do people need to be thinking about to cover their assets beyond that?
Yeah, it's we're recommending that people that own a home and have assets to protect add a personal umbrella liability policy, and those start at $1 million. And those sit on top of your auto and home policy and give you an excess $1 million of coverage if you're sued for negligence that causes injury to another party. So it could be an auto accident, could be somebody slips and falls down your stairs at your house. Either any kind of accident that happens that it's covered by auto or home, your umbrella sits on top of those limits and gives you an extra $1 million of coverage. So your assets, you should add up your assets, and whatever those total up, and assets are your retirement plans, your investments, your home, your cars, everything that you have, add those up, and your liability limits should equal that or exceed that, so that all your assets are protected. If you are sued and your liability limits are not enough, they can come in and take your assets, they can garnish your wages. But if your insurance is high enough, then most times they'll settle for the policy limits. So we're recommending everyone carry $1 million of liability if they own a home and have any assets at all to protect. And in many cases, some of our $1 million umbrella people, we're recommending you bump to $2 million to make sure all of your assets are protected.
And it makes a lot of sense, and a lot of people don't know about the umbrella policy, just talking to people every day on the phones out here. And it's really important coverage because, you never know when you could have multiple claims in a year or one big one, and you're on the other end of paralyzing someone in the auto accident.
Yeah, I mean, nobody ever thinks that it's going to happen to them, and even if there's even if you didn't do anything wrong, you can be sued. I mean, people can sue for anything. The problem with that is you have to pay to defend yourself, and attorneys are expensive, and so for the price of an hour or 2 hours of an attorney fee, you have an umbrella policy that's going to pay all your defense costs, even if there's no merit in the lawsuit.
That's good protection to have. So as we start to wrap up the end of this, I kind of want to, people are getting these forms at renewal. You got your PIP selection, your bodily injury forms that we talked about. What's Mark Diederich, what's TDA's recommendation to people out there who don't know what to do?
Yeah, that's a good question. You're going to get packages from your insurance company prior to renewals starting July 2nd, and you should get those at least 30, 60, 90 days before your renewal, depending on the company. And they're going to lay out all of your choices. The forms, quite honestly, are detailed and confusing to most consumers, but it's important that you make the right decision, or else it could change your life for the worse if you don't make the right decisions. And the forms are a bit complicated. The good news is that if you do nothing at all, the default limits are going to be unlimited for the PIP and the 250, 500 or higher for the bodily injury limits. So if you say, I don't want to go through these forms, I want to keep the best benefits I can get, and I'm just gonna stick with what I've got and take the recommendations, then you don't have to fill out the forms, you don't have to go through all the material. But if you are gonna make a choice, make sure you understand the choices that you're making. Go to our website, tdanow.com, Michigan Auto Reform. We have a lot of information that shows you side-by-side benefits. Make sure you understand if you are opting out or if you're reducing your coverage, what you're going to be losing. And then you've got to fill out the forms properly. You've got to check the right boxes. You've got to sign in the right places. If you're opting out, you're going to have a letter from the medical insurance company saying that your medical insurance is qualified under the law, which means the deductible is less than $6,000, and your auto insurance will pay in the event of an auto accident. And it's got to list all the members that are covered on that policy. If that letter isn't intact and it's submitted with your forms, the insurance company isn't going to allow you to opt out. So you have to make sure you have that. If you're opting out under Medicare, you have to have your Medicare card that shows Part A and Part B to opt out that way. So, so those are the important things. You sign your forms, you make the right selections, you attach that qualified health care or Medicare card, and then you submit all that to the insurance company and make sure that's processed. If you're one of our clients and you need help, you just call our office, and we've got our licensed account managers and staff here that will help you make those decisions and fill out those forms and get it done the right way.
So a couple of things that, as you're talking about that I've had come up as questions talking to people about this on the phone. One is there's a qualified health care plan, and you have to get a letter for that from your health insurance company. Mm-hmm. But the other part that people get confused about is something that's been in place and hasn't changed. It's the coordination, and sometimes the coordination of your PIP benefits with your health insurance. And sometimes the auto insurance company will require a letter from your health insurance for that too. Can you clear up the difference between those two things?
Yeah, so the qualified health care letter, as I mentioned, is going to say that under the state statutes, it meets the medical insurance meets the requirement of the less than $6,000 deductible, and it's going to list all the members covered under that. So that's just required to opt out. The second piece of it that's been in place for many years is that you can select whether you want your auto insurance to be primary and your medical insurance to be secondary, or vice versa. If you elect for your medical insurance to pay first, then you have to, you get a discount, first of all, on your rates, because medical is going to pay first, auto is going to pay second. You get a discount. But there are medical insurance companies that will not pay on a primary basis. A lot of the larger companies have self-funded plans, GM, Ford, Chrysler. Some of those plans have written into their language that they will only pay secondary in the event of an auto accident. So in those cases, you are not able to coordinate benefits and make medical first, auto second, and receive a discount on your auto insurance. Most companies are now, insurance companies are now requiring you to get proof that you can put your medical insurance primary, and that's the secondary letter that we call the coordination of benefits letter. And it just says that they will pay, the medical insurance company will pay primary in the event of an auto accident. So you could need, if you could be getting one or both of those letters depending on your situation.
Yeah, I think that will clear up that for a lot of people. Another thing that I want to talk about is people, they want to save. They've heard the attention in the news, they want to save. But they still can save by keeping the unlimited coverage, the unlimited PIP coverage, because of the drop in the MCCA fee, correct?
Right. Yeah, most people, depending on their individual situation, will see an $85 to $100 reduction even with the unlimited benefits, because the catastrophic claims fund, which handles claims that go over $550,000, they are anticipating less claims because people are going to be taking lower limits and opting out and things. So they have preemptively reduced their MCCA surcharge fee. So everybody will see, assuming no other changes in their auto policy, we'll see an $85 to $100 rate reduction per vehicle on their cars. Now that's going to be offset with the increasing bodily injury limits, because we're going to see more suits in that area. So it's not going to be big life-changing money, but most people will see a slight decrease even if they keep the unlimited benefits.
And they also, when this law was signed into place to help people who didn't have insurance get insurance, they changed some of the rating basis. So people can kind of lose discounts that they used to have, so that could also offset some savings because of that change as well.
Yeah, there are a lot of little things in there that have been removed and things, but yeah, so it's each case is individual. I mean, I saw somebody made a post on Facebook the other day that they saved $3,000 by making a change and kept their unlimited benefits. That was not accurate. It was something else must have changed. They rewrote the policy and lost an accident or ticket. You won't see swings more than a few $100s by any of these choices that you're making.
So to clear the chaos and confusion, our recommendation: what PIP selection, what liability, what umbrella?
Yeah, we're recommending for most people that they keep their unlimited benefits, and if that's not affordable for them, then step down one level to the $500,000 benefit, and ride with that for a year and see how things look. It's not where the step down from 500 to 250 is not substantial enough premium wise to make it worth doing that. And opting out, in my opinion, is not a good value either, unless you just plain can't afford insurance. So that on the PIP, that's our recommendation. On the bodily injury limit, we're recommending everyone take at least the $250,000, $500,000 state recommended limits or higher. Many of our clients, because they have assets, have higher limits than that already, so they would stick with what they have. And then we are also, like we mentioned earlier, anyone that has a home and any assets to protect should have at least a $1 million umbrella liability policy. So unlimited benefits, at least $250,000, $500,000 bodily injury, and add an umbrella.
There you go. And so I think that really gives people a lot of clear, conversation. And you see all these, short segments on the news. You see these Facebook posts from agents, from carriers, it's nice to have a long form conversation that people can tune into and really get the in-depth knowledge from a 25-year professional in the industry in Michigan too. So you've been doing this stuff for a long time. Thanks for taking the time to come on my podcast and share your knowledge with everyone else. As we always do here on the Professional People Podcast, what's one piece of advice you have for young professional people out there going forward?
Oh, that's a good question. There's a couple of things that I've tried to use throughout my career, and the first one being is I'm a big believer in setting goals and action plans to achieve those goals and relentlessly pursuing those goals. If you don't have goals, you don't know what you're getting up every day and working towards. So big believer in that, setting goals and working towards those and holding yourself and others accountable to goals. And secondly, it's do the right thing for people even when no one's watching. It's easy in any business to kind of do things not the right way to earn an extra buck or two, but we've grown a very successful business and had a very successful career by trying to do the right things for the clients. We don't worry about the commission dollars. We try to do what's right for the client, and with the thought, if we take care of the client, they're going to send other clients to us, and that reward is much more than trying to shortcut the system or trying to earn an extra buck or two on any particular account. So always try to do the right thing, treat others as you want to be treated, put yourself in their shoes.
Well, Mark, thanks for sharing your wisdom and with our listeners, and thanks for sharing all your wisdom with me over the years.
Thanks for having me on. I appreciate it. It's been great.
Go back to social distancing.
Thanks for listening. And remember, keep it professional, people.